Hello, everyone, and welcome to our March Market Navigator update from Benoit Capital. The first 2 months of the year have been active on both the geopolitical and economic fronts, with plenty of headlines capturing attention. I'm Michael Cochran, and over the next few minutes, I'll break down the major developments shaping the markets and highlight the key areas we're watching as we head into spring. Joint airstrikes on Iran continue, targeting sites to slow nuclear development and weaken the country's military capabilities. Tensions have escalated further with the death of Iran's leader, along with other political and military leaders. In response, Iran launched widespread missile attacks against Israel and several Gulf nations, including Qatar, the UAE, Bahrain, and Saudi Arabia. The region has felt the impact as energy supplies were disrupted because of tanker traffic, driving oil and gas prices higher. Even with the severity of recent events and uncertainty ahead, it's helpful to look at the stock market through a historical lens. Markets have often recovered quickly once conditions begin to stabilize, typically within days or a few weeks, as long as the U.S. economy avoids recession. Geopolitical shocks like this can certainly elevate volatility, but they rarely disrupt long-term market trends unless the economic impact becomes both deep and long-lasting. Our outlook for the stock market heading into 2026 remains positive. The economy continues to grow, supported by fiscal stimulus and ongoing investment in artificial intelligence. Even with concerns about AI-driven disruption, these forces are creating a constructive environment for stocks. We've seen breadth increase in the stock market, and corporate earnings, especially in the technology sector, remain strong. In the fourth quarter, S&P 500 earnings per share grew 14%, showing solid momentum. The Federal Reserve is still expected to begin cutting interest rates in the second half of the year, with the outlook for inflation pressures to ease. And despite the initial sell-off in treasuries following the Iran strikes, interest rates remain at levels the economy can comfortably absorb. Mortgage rates also dipped below 6% in February for the first time since 2022, offering support to the housing market, a key part of overall economic health. Taken together, these dynamics suggest that any near-term weakness driven by geopolitical volatility may ultimately present opportunities in the market. Volatility during periods of geopolitical uncertainty can be challenging, but history shows that maintaining a long-term perspective is often the best strategy. While headlines may trigger short-term market swings, the broader economy remains healthy and corporate earnings continue to grow. Rather than reacting to one event, investors are better served by focusing on their long-term financial plan, supported by a well-diversified portfolio. If you'd like to discuss how current events may influence your financial goals, or simply want a fresh perspective, our team at Benoit Capital is here to support you. Please feel free to reach out with any questions or updates regarding your financial situation. As always, we value the opportunity to serve you and remain committed to providing guidance aligned with your long-term objectives.